Now, everyone, welcome to another edition of Your Money Radio. Let's see, Hunter, Mazingo, Alex, Katutis, Danny Stewart, Don Vandenbord here with you live. Whenever you are listening to us, that is when we are live. So it's Friday, so let's get into a few things here that are super interesting to me. Hunter, real quick. Kathy Wood, I found this interesting, and I know Don follows IPOs. I think, Hunter, I can't figure out if you're a Kathy Wood fan. Maybe it was Alex. I apologize if I got it all confused. Kathy Wood's fund. I want to talk about this real quick. Kathy Wood's, this is ARKK, okay? So 118 billion, the market cap, weighted average market cap, median market cap 20 billion. Typical holdings 35 to 55 holdings. And here's the chart of Coinbase. You can see it hit 429 last week, and now it's down at 294. There hasn't been a day Coinbase has been out, and if I'm wrong, someone just correct me, where she hasn't been buying. Has anyone been following that, or am I the only one?
Nope, I was aware of that. Yep, very strange.
Yep. And she now owns 580 million worth.
How
much of the company is that?
That's a great. No, I was gonna say I don't think it's very much at all, but in terms of her continuous buying, and so she's just amassing a big position, and I don't know what's ARK trading at for the year. Does anyone have a stat on that? Because
no, they had gone slightly positive after the pullback.
Yeah, they're down 2%.
2% for the year. So it's interesting though, but I don't know how Kathy Woods trades, and that's the thing. Like I'm a new follower towards the end of last year, more so this year. Is this how she built her Tesla position? But I mean, I don't know, and I doubt you fellas would know. That's not a trick question. But it's interesting that I wonder how many people performance chased Kathy Wood, and this is just how she acts. Like this is just her market pattern behavior, right, wrong, or indifferent, and this is how she does it. And they love the returns in a year like last year, and now this year people are wondering, like if you found Kathy Wood at the end of last year, you're probably down a little more than 2%, right?
High was 160 on ARKK. It's 122, 123 right now.
So, and
that was in February, right around the peak of a lot of growth names.
Mm-hmm. Yeah, so it's super interesting. If anyone's following Coin, I don't think there's a bigger supporter than Kathy Wood right now, stepping in and buying Coin. I can't.
How many shares did you say she has?
I did dollar figure.
Oh, okay.
Yeah, 580 million. So how many shares is that? We just do the quick math based on where it's trading right now. If someone
look at the market cap, divide that market cap into that, you'll get the percentage she owns.
But it's super interesting what she's attempting to do, and if the market is going to agree with her, I would think eventually the market agrees with her. But we did this last week, and I'm just kind of following up. We looked at IPO. I very quickly looked at the IPO of Bob and how it pulled back 10%. I'm not sure if ARK is down 10% from where it opened. Are we there yet? We're down more. We're down to like 20% for somewhere maybe where it opened.
Wow, so she's got 1.9 million shares, and there's only 12.7 million in the float.
So I was right.
And now think about that.
Is that math right? Let me verify that. You said 560 million.
580 million.
580 million.
Yep.
That's roughly.
I'm dividing by 300. It's a little less than that, but she accumulated them all over the place. Is 1.933 million shares. Wow.
That's a lot. That's a lot of shares of Coinbase. I mean, that's she. I wonder if she's the biggest shareholder right now, outside of anybody from inside the company.
It's about,
unless Market Smith is wrong. They say there's 12.7 million shares in the float. There could be more. I'm gone by that.
Let's pause that for a second on that number. Let's assume that it's right. It could be wrong, but let's assume that it's right. On the very first day of trade, Coin traded 50 million shares that day. Did those 12 million shares trade over and over? Yeah, just the churn, just incredible number.
That's like a 700-800% turnover today.
just insane. So anyway, when you're in IPOs and you're looking at IPOs and a number of IPO, the IPO windows kind of slowed down a little bit, but wanted to follow up with that. But I've got stuff on taxes. We're going to cover stock owners, market levers, and not just the old men in the Muppet balcony complaining about taxes. I've got a different way to look at this, and I want to share it with you. going over my big book of notes here. You see me looking off screen, but I want to talk real quick, Hunter. I like to do this with Hunter, not because there's no point being made here. Oh gosh, Hunter, I'm going to forget what I want to talk to you. Before I talk to you about the NFL draft betting and the state of DraftKings and Penn, you know who I'm talking with now? Do you know who I have? You know I love Twitter, right, Hunter?
I do. Is it MeMommie?
I have had ongoing conversations with MeMommie, and I feel wonderful about it.
God.
So I love Twitter. This is why like Twitter could be a snarky place. Twitter could be such a bad place sometimes, not the best place. But MeMommie, man, her and I, if you want to follow, it's at TJ Razor. If you want Danny right here, let me see, one Danny Stewart is how you get Danny, and there it is, one Danny Stewart. He's got his horses and some geese there. D Vandenbord, where's Don? D Vandenbord, if you want to follow Don. And then look, Feel Good Twitter is what I'm here for. MeMommie is Feel Good Twitter, right? I love my conversations with her. But let me show you something at home, stock nerds and market lovers, the people that email me constantly and say you don't want to be, oh, it just went away. I don't know why it updated. If you email me, the guy's name's Giovanni, and he literally he's got muscular issues. He's a big Philly sports fan. He literally just threw the football for the first time, I think, with his dad. Like, that's the kind of Twitter I'm absolutely positively here for. Like, it's a tearjerker. But Hunter, MeMommie says to remind you that she drove you, and this is the best tweet ever. And I told her I was going to read this to her. She says, Tim, this is MeMommie, remind Hunter that I drove him and his brothers to GameStop when they were little boys. Yep. And MeMommie has thoughts on inflation, which I love. Like she's listening to the show. She's contributing now to the show. I love MeMommie as guest contributor, MeMommie. Like when we get graphics coming in and we start producing the show a little bit more, which is coming in the very near future, guest contributor MeMommie graphics will absolutely come into the screen. And it's
sure she'll love
absolutely
that.
By the way, oh, did she go to Tumor? Is that Tumor from what is Tumor's Corner in Auburn?
It's it's where they roll the trees after Auburn wins. It's like the bars, and Tumor's Corner is a famous little like restaurant and store there.
She mentions there's a Whataburger there. Like MeMommie is paying attention. She knows Whataburger.
She does.
Yeah. And then here's the thing. She's with me, right? She's with me. We'll get to the draft in a minute here, Hunter. She's with me about hamburgers. Not going to pay $17 for the privilege to eat at Five Guys. Little rift in the relationship with Hunter and MeMommie. Danny, you want to put that in the show notes?
I won't be paying that again. Just FYI. That was a unknown. Like I was expecting like 12, $13, and I got 17. I was like, I don't feel like this is worth $17.
Right. And now, and MeMommie leads me into what I'm going to get to here in taxes and inflation. From all that interaction, Hunter, when I need to break up the show because it's getting too dry or serious, I'll come back to NFL draft, okay? Here is, I was unprepared last week. I couldn't find lumber. And I couldn't find lumber because I had no idea that it looked like the abbreviation for how you would do pounds. It's it's LBS, man. I had no idea. So I was unprepared, right? But MeMommie got me back to thinking, this is with the big tax news that came out yesterday, and MeMommie mentioning inflation, the privilege of buying $17 hamburgers. Man, I'm so with MeMommie. I like MeMommie. LBS lumber, you can see this chart. And if I take it back just a little bit further, I mean, this is absolutely, we're on a daily chart, folks, and you can see how lumber bottoms out, and then this is what inflation looks like. But let me run through a couple different futures markets with you, because it's going to make a point here with taxes. Here's I believe these are soybeans. Let's see, all of these are soy product here. There's another soy product. Here's ZS. I mean, the stuff that we consume in this country is absolutely just blown up, and it's at highs. It's not backing out. Here's hogs, HE. So pork products. I mean,
Sounds bacon.
That's bacon, right? This is you're literally looking at a chart of bacon, and so all of this, stock nerds and market lovers, is a tax. Like Jay Powell can think inflation is transitory, but I don't think he's right. I think that inflation is here. Like, think about what's going to get. This tax is, think of this, what you're paying right now for food. I think of it as a forever tax. Like, have you ever gone to the restaurant? We'll use Five Guys, McDonald's, Whataburger. Have they ever, Starbucks is the king of this. Even though coffee prices fluctuate, they've never once lowered their price of coffee. Once the restaurants raise prices, they never lower them. I mean, I find me an example. I'm open to it. I'm not omnipotent here. Like, they don't, especially fast casual, fast food, once they establish what the price is, that's not coming down, because every time that the futures market behind what they're selling, be it beef, be it pork, be it grains, once those inputs come down, that hits their bottom line. They're paying less. Their suppliers might charge less, but the establishment themselves is not going to charge less. And so when inflation, when someone says, what does the cost of lumber have to do with me? Do you think D.R. Horton or M.I. Homes or oh gosh, what's the low end builder that literally starts with an L? It just escaped.
Lennar.
No, not Lennar.
LHCI.
Thank you, LHGI. They're not going to lower the cost of their homes. This is it. Like, what you see as a baseline now is it. Well, Tim, surely you're wrong. I'm open to being wrong, and I really hope I'm wrong. But what would it take for Lennar, LGIH, D.R. Horton, Whataburger? What would it take for them to lower their prices?
Lower demand.
No, an effing pandemic or a financial crisis. That's what it is. Lower demand, Hunter. You're right, but it's not going to just because the inputs go lower. These charts could effing sink, and you're not going to see any relief. The only place you see relief when demand goes down or there's a glut is gasoline and airline tickets and hotels, right? But when it comes to the things that you do, it's not I mean, you do get the gasoline pretty much every day because of the way this country works. But hotels and airlines are, quote unquote, luxuries almost. So what do you think? That's why when people say we're going to go back to in-person meetings, I don't disagree. Like people, we're humans. Like, we need contact. We're not cyborgs. But well, I mean, okay, Ross Gerber's a cyborg. We all know that. But
Zuckerberg.
Bro, Zuckerberg is just male small wonder, right? Like at night, they just open his back panel and they do a few adjustments. They put him back in the closet. He comes out the next day and says, "Hi, everybody." So you guys don't know small wonder, do you, Hunter?
No, I don't.
No, you don't know small.
Mark Zuckerberg looks like Data on Star Trek.
Yep.
Really? You put those
They're
glasses
twins,
on?
basically.
Him looks just like Data.
That's interesting. Okay, so you're never going to get lower prices. That's why when people say this, whatever, like, it's going to be cheaper in the long run for these companies to continue Zooming, to continue teledocking, to continue doing. That's why I think these changes are permanent. Like, yeah, you're going to go back to some forms of the way it was, but this accelerated. And I think inflation is the reason behind it. Like, this cooking from home trend, like, I don't think that's done. People want to go out to eat, but when, Hunter, what you just said, it wasn't a setup, but what you just said was, I wasn't expecting $17 a burger, but I'm probably not going back. So now you're not a regular, right? And I think a lot of people are going to get sticker shock when they start going back out. Like, the novelty of paying $15 to $20 for a hamburger, fries, and a Coke is going to wear off effing fast. And why is it going to wear off that fast? Because wages haven't moved. You look at a chart of wages haven't moved.
It's not going to wear off. If they're still doing it through a pandemic, they're not changing. People don't lower their prices, and the way companies do lower their prices is by advertising that they added something to their dollar menu, which is a loss leader.
Hold on, pause. You just said something so important, Don. Dollar menu. There's no dollar menu at McDonald's anymore.
No.
It's the $3
Oh, no,
menu.
there is. Yeah, it's the 1, 2, 3.
And 1, 2, 3. For what? Inflation.
Wait, there's no dollar menu?
Well, it's what Don said. It's the 1, 2. They've graduated it up. Like,
Yeah.
like
$1, $2, $3 menu.
It's
Yeah.
normally the value menu now. It'll be like 129, 149. Not necessarily. I'm talking about Taco Bell specifically, but
You can't get a hamburger for $1.
you know when Taco Bell raises their
no, I don't
prices,
think so.
it's hit the fan because you can eat like a king at Taco Bell, and
You can get 2 McDoubles for $3 at McDonald's.
That's not bad.
that's 4 patties.
I'm glad I
It is
don't know
4.
all this stuff.
Don's a McDonald's expert. The analyst, the
Um,
McDonald's analyst.
Well,
My,
I'll tell you one reason. I'll tell you one reason you don't go back for a $17 hamburger, because you can cook 2 nice ribeyes at home. You can buy 2 ribeyes, and you and your wife can eat a nice ribeye for a $17 hamburger.
Oh, you're right.
But there's times that you want to go out and you don't want to do the dishes afterwards.
Sure,
Like that. That's why you go.
Yeah.
Yeah. My problem, by the way, let's just talk steak for a second. My problem with steak is like Tanya can cook it so much better than a lot of these restaurants out here, like Texas Roadhouse, and I get frustrated by that. And
Is she pan fry or grill?
she sears it on the pan fry. We've done we've tried the reverse sear, but mostly pan fried into the oven.
Okay.
Yeah, and it's so much, it's genuinely better, and it's really hard for me. Like I don't know if cheap's the right word, but I'm eating a steak that's, anywhere from what, $40, $50, and I know I can taste it's not even close to as good as what Tanya has made me in the past.
That's a luxury, though.
It's frustrating. And so, but I think what you're seeing with like Butcher Box, Omaha is increasing the value. There's more independent butcher direct to consumer. I think you'll see people investing in higher quality ingredients and cooking them at home after the novelty of going back out and paying $17 for a burger wears off. I think that's
If you want to feel good about a $17 burger, take a trip to Ruth's Chris and then reflect on it. Reflect on the charge on your credit card statement, and then reflect on the $17 burger on your credit card statement.
And you had to order a la carte at Ruth's Chris, if I'm correct, if I remember correctly. Yeah.
Yep.
Really?
Yeah.
But they do cook a steak evenly and perfectly, no matter how you order it.
No, they don't.
It's a good steak, but it's very expensive.
I forget where Tanya and I went. Was it the Double Eagle, or maybe it was
That's good. That's
the Double Eagle. Yeah, I forget who's the Double Eagle. They used to have a public ticker symbol, and I literally can't remember it right now. But anyway, we do that on our anniversary when you were allowed to go to restaurants, which you can do now. We couldn't do it last year. Anyway,
a Ruth's Chris filet is no better than an Outback filet.
By the way, okay, I went to Outback.
Wow,
that's bad.
Nope, true.
But this brings me now to taxes, and so.
By the way, you're talking about Del Frisco's. Del Frisco's double.
DFRG used to be. They're not a ticker anymore, right? Could someone try to punch that in? I don't think DFRG trades. I think they got taken over. Yeah, DFRG was the ticker for Del Frisco's.
I don't have anything pulling up right now.
Yeah, they got bought out. Got introduced to Del Frisco's from one of the Nigerian brothers when I was doing classes with them. Anyway, so when I'm looking at taxes, it's really easy. So if you don't know the tax news that came out yesterday and kind of pulled markets back, well, very quickly, high level, the tax is going to be on capital gains. And so the tax is not good. Corporations are dealing with another tax issue where they're trying to get it back up to 28%. This tax, it's not even an introduction. It was a leak. And I believe I believe everybody knows something. When you want to get a feel of what the country thinks, you leak something. Okay. And so it's a trial balloon. So they leaked a trial balloon yesterday to see how the market, this is my theory. Nobody knows for the truth, to see how the market would react. And I believe to see how the American population would react, because this is a populist thing. They're going to tax capital gains on people who make over $400,000. So it's pitting classes against each other in essence, right? Because it only affects 0.3% of the population. And so, Danny, this is where, Danny, I need you to just kind of pay more attention, because
I'm here, baby. I'm here.
I know we were talking steak earlier. We're into taxes.
That's why I'm paying attention. You were talking steak.
This whole show is your wheelhouse. So I'm going to go over. I feign to say it. I'm going to go over what's good about this tax thing, okay? And then I'm going to cover what I believe is to be the real the real issues with this tax thing. And
The
look,
only thing good about it is it hasn't passed yet.
well, look,
That's correct.
so hold on, Don. Do it more with a smile, please. Can you say the word? Can you say the word taxes? more with
That's
a smile?
correct.
There you are. There you are. How you feel about that tax plan, Don?
Is
Oh,
terrific.
Don't get
That's exactly what it. Okay.
I was
so,
told I can't say what I really think.
No, Don. That's not how
I
hostage.
said just the
situations
facts.
work.
I didn't say.
When you're trying to do proof of life, you blink a lot and smile so people know that something's wrong. You're totally bummed. And then Alex is going to get on the phone. I don't know who you are. I don't know where you have him.
Right.
I'm going to find you. And I'm going to hunt you down. What is that from? Who is that actor? He
It's
plays the same.
Liam
Was it
Neeson.
Liam Neeson?
Yeah, he plays the same dude every time, right?
Oh, he sure
Yeah,
does.
every time. Typecast.
Like we should get him doing like how Arnold broke out with like Kindergarten Cop or something, right? Like
Oh,
Liam
great movie,
Neeson-
by the way. Great movie. Nobody. Put it on
Yeah,
your
I
watch
watched
list.
that. That was good.
Fantastic movie.
What was that
Yeah.
about? Was it Liam Neeson?
Nope.
No? Who was it?
I don't know the guy's name.
I don't
Or
either.
doesn't matter.
It was good.
Oh,
It was
speaking
incredible.
of good,
John,
Falcon.
better fight scenes than John Wick. And that's saying
No
something.
shot. No way.
Totally better than John Wick.
No. John
Absolutely.
Wick. John Wick is the
Better.
cream of the crop.
So Danny, I don't have a good transition. I had a Falcon and a Winter Soldier thing that by the way, that is awesome. But
You had it until you started letting them talk. Then you.
you know what, man, it's my fault. Look, every now and then I'm allowed to slip. So what's good about this tax thing? And like markets are having you can see markets today are super strong and they're just kind of shrugging it off, up 1.5% on the NASDAQ here. So what's good about this is that it's not corporation based, right? Like corporations aren't going, they're not talking about capital gains of corporations. Corporations are dealing with their own tax issues, trying to hold down what 20 to 23% and not go back up to 28. So that's good. So it's not going to affect corporations per se. I have to look at my list.
Yes, it is. They just didn't talk about it yesterday.
Let me finish. God, I'm going to set you up here, Don. You gotta let the show unfold in front of you and let the anger build up. That's how
Do you
this
think
works.
do you think I waited till Christmas morning to open presents?
Don, he's going to give you a slow pitch. You just got to be patient.
I
before you
can't
get it down the park.
do it, Dan.
So the second thing, by the way, everything we're talking about here, this is why I typically feign from these discussions on the show. There's nothing we can do about it. There's nothing at home. If you're watching this, unless you're a lawmaker, there's nothing you can do about this. There's nothing the five of us can do about this. So that's why I don't like watching analysis of any of this nonsense, because it's all just one big theory piece that means nothing. And so what I'm trying to bring to you is, in the second part here, I think some things that you do really need to consider as we head towards the end of 2021. Nothing you can do about it. It's not essentially on companies, although apparently my thought when I wrote the note down was this will get Don triggered. Don't let him talk. Literally, it says in my notebook here, Don, this will get Don triggered. Don't let him talk to the end. Let him build it up and then let him go.
Well, you do have the mute button, and you had the option of taking advantage of it.
Okay, Kettle.
Hey, this isn't Twitter.
Yeah.
So, and then here's the other thing too. Most stocks, and I think this is what you're seeing today, most stocks are held in non-taxable accounts. So whether you make $400,000 or more or less, it doesn't matter. If you're in an IRA or a 401k, you pay the tax when you come out with the IRA, but you've already paid the tax in the Roth. So it's a non-starter in that regards. That's where most stocks are held. But most individuals don't have stocks in taxable accounts. This is where it gets bad, and this is what I don't think people are really thinking of. So let me set up what's happening here. Currently, the max tax on capital gains is 20%. Think that you held the stock over a year and your gains you want to sell it. It's 20% plus 3.8% to account for the Obamacare tax. So it's in essence, you're getting taxed right now in 2021 on long-term capital gains at 23.8%. The proposal, which is flippin' ridiculous, is a tax at 39.6% and then an additional 3.8% for the Obamacare tax. So you're more than doubling the capital gains. That's the first thing you need to understand, that if this passes the way it's written or the way it was leaked, you're going to literally double the capital gains. But everyone that I've read or tried to listen to is talking about it in terms of the stock market. And I think that that's a huge mistake. You need to think of capital gains as any asset. And that asset could be real estate, could be collectible cars, could be cryptocurrency, or it could be your home. And Danny, if I'm wrong, I need you to correct me, but when you sell your assets, part of that becomes your income. And so there's a problem here, because people are like, well, they don't have to move, they don't have to sell these assets. But there's a larger issue here that's going to come into play if this bill is to become law. And it's with small and medium-sized businesses. Small and medium-sized businesses are assets. They make up the majority of employment in this country. And what happens with that, with these businesses, yes, some of them come and go, but a lot of them are generational and they're handed down or they're bought and they're paid for. And those sales of those businesses, or whether they're bought outside, it doesn't matter. But those are assets. And when those businesses are sold, they're taxed as capital gains. And so you're going to have somebody who's working in a business and they're going to go sell, they want to sell their business, or they're nearing retirement. Think someone who's 50 or 55 that's worked their whole life in a small, medium-sized business. They're not making bank. Maybe they make six figures, maybe they don't. But when they go to sell their business, it's going to trigger this tax, most likely, if they sell it for a sizable sum, or something that's more than what they started with. They're going to trigger this tax, more than $400,000. They're going to trigger this tax. So now you run the risk of decentivizing people to create jobs, decentivizing for people to keep on going jobs. If you have the opportunity to sell your business or just shut it down in 2021, because if you go to get out of your business, it's literally going to be worth 23% less, 20% less. What are you going to do? This law, absolutely, positively, if passed the way it's written, is going to, I think, cause a massive sell-off come the end of 2021. Not a pullback. Think massive sell-off, and it's going to be people just dumping assets, and they could be dumping small businesses because they don't want to incur the tax in 2022. They could be dumping crypto assets because they're going to get taxed. And if you had the chance to sell half of your Bitcoin position, you have $1 million in Bitcoin and you can save yourself 20%. What are you going to do? You're going to save yourself 20%. And so the way this law is written right now, it's going to cause people who have taxable capital gains, think venture capital, think private equity. Do you think they're going to accelerate their timelines of wanting to take profits? Their investment is literally worth 20% more if they get out of it in 2021. And when private money, private equity, and it doesn't have to be, don't think rich fat cats private equity or rich fat cat venture capital. Think just private. When people start dumping things, it typically cascades. And you see it, where do you see it show up? You typically see it show up in the markets. This bill, the way it's written, tremendous ramifications. Can someone look up for me, because I forgot to do it and I apologize for my lack of preparedness here. I believe California is the 5th highest GDP in the world. Can someone just verify that for me, please?
I'm pretty sure that's right.
So whatever,
I don't know how old that number is, but that was definitely true about 4 or 5 years ago.
yeah.
I do want to ask two questions though. First of all, it's only if you make over $1 million that they're talking about bumping that up, correct?
I thought it was 400,000.
I think it's 400,000. I think they lowered
Okay,
it.
I read $1 million, but it's conjecture anyway. But according to a study by the Tax Policy Center, and this is 5 years old, only 25% of corporate stocks are held in taxable accounts, and the rest is in retirement or tax exempt accounts, contribution plans, or by foreigners or nonprofits.
I think that's
I would have thought it was not that much, but it's been steadily decreasing since 1965 when it was 80%.
And I think that's enough to get the ball rolling to a major sell-off. Anyone have that GDP number?
Yeah, it's fifth.
It looks like you're right. Yeah.
The fifth. So you're going to take the taxable rate on cap gains in California, the fifth highest GDP in the world, to 56.7%. In New Jersey, it's going to go to 54.1%. In New York City, it's going to go to 58.2%.
I have a question.
Yeah, go ahead.
Sorry. Is this on gains? Like, is that measured on your income or the gains? Like they
Capital
put you in
gains.
that tax. So if you make over 400,000, then you get put in that tax code.
Yes, yes. It's going to be a graduated scale somehow.
And if I'm wrong about that, listen, let me just apologize. Anything I'm wrong about, stock nerds, I apologize.
Okay.
I'm a fallible person. I'm allowed to be wrong, but these rates they seem unsustainable. The highest tax rate back in I believe there was a higher tax rate back in World War II, which was to fund the war. But I believe the highest you got was on capital gains. Danny, can someone Google that for me? Highest cap gains rate.
It was $1 million, by the way, not 400,000.
It is $1 million. Thank you. You sell a business and that becomes your income. That you're going to trigger this. You're going to trigger this tax.
Well, it depends on whether it's long-term or short-term. Short-term
Short-term's already charged at ordinary income. What they're doing, yeah.
But I'm not sure that a long-term capital gains rates makes your AGI, your income go up.
Well, that's what they're doing, Danny. In essence, they're taking short-term capital gains, folks. If you don't know, like if you day trade or less than a year, you hold it less than a year, you're getting taxed at you're getting taxed at a rate that's equivalent to your income tax bracket. That's what short-term capital gains are. That's what they're doing with this law. They're taking long-term capital gains, got special treatment to encourage investment, to encourage stability, to encourage just let your what Warren Buffett says, right? It's not how you time the market, but your time in the market. It's to encourage all that. Don't you start a Warren Buffett anybody. Now they're just going to take. There's no incentive to hold. This has such deeper ramifications than just the narrative, which is tax the rich, because the small and medium-sized business owners aren't rich. They're risk takers. They're risk takers, and they're risk takers in this country. The entrepreneur is just a French word for risk taker. We incentivize that in this country because it generates massive jobs, and those jobs generate massive growth for the economy. And what you're about to do is squash that. And that is.
I don't know how small businesses can do it. Like you have to pay a corporation tax, and then you got to pay an income tax when you're paying yourself. So you're getting taxed twice already. Props to everyone that runs a small business. I don't know how you guys do it.
Don't take the salary because they don't want to get the extra tax in there, because they figure they're going to get their payday when they sell it. And now you're just about to get hit. It's not when you go to sell your home, like there's a real estate shortage right now. Your home is an asset that's about to be taxed if you go to sell it and you have gains in it, which, I mean, I hate the word assume, but let's just assume everybody has gains in their home. You're about to see it worth less in 2022, most likely because of this tax.
Well, if they take away, so right now with a homestead, if you live there 2 out of the last 5 years, the husband and wife each get a 250 capital gain exemption. So you could have a $500,000 gain in your house and you don't pay any tax off. If they touch that, that'll just crush house prices.
Well, there's like 2 prominent states that don't have homesteading, and I think is one of them Florida. And Don, you would
No, Florida has homestead.
They do?
Yeah, Florida's homestead for sure. But this is federal tax, federal capital gains for the thing. But I'd like to make a couple points.
Please. I don't want to talk while I look something up here.
Yeah. So first of all, this will definitely put a damper on business. But and so Tim, you were talking about the businesses. These people don't have a lot of cash. It's like the old adage for the rancher, the farmer, or the farmer. They're cash rich and land poor. I mean,
right.
They're cash poor and land rich, cash poor. So they don't have a lot of capital. Well, they're also talking about on inheritance, they're going to lower the annual, the lifetime exemption. So if you die, you get a certain amount passed to your heirs, estate tax free. They're going to lower that significantly, but they're also going to take away the step up in basis. So if your parents started a farm or a ranch or whatever, or even Apple stock and bought it at 100, now it's at 500. That farm was 100 or 300,000, and they built it up to 2 million. Well, now they're going to say, instead of inheriting it with a new basis of 2 million, they're going to call it that original 200,000. So now you own capital gains on 1.8 million, and the only way to raise that capital is to sell the farm. So you're not going to, it's going to wipe out families and rent. I mean, unless they do some kind of special exclusion, people with closely held businesses, small.
That makes no sense. I don't understand that. Like, if that person paid taxes their whole life and earned that,
why? About the money. Oh yeah,
you're trying to apply common sense, Alex. It doesn't apply in this situation.
That sounds criminal to me.
It is.
Yeah.
Yeah. Before they bury you, they got to slap you a few more times when you're old.
Slap your kids, your family.
Like, the estate taxes is they eliminated it. Was it Bush that did away with it for a few years?
No, for 2000. So a long time ago, it used to be it was 750. Then it went to like $1 million. Bush got it to 2.5 one year, 3.5, and then in 2011, if you really loved your kids, there was no estate tax for 1 year. So you commit suicide in 2011, so your kids get home for free.
Oh no!
What a stupid rule. And then it would sunset back to around 3.5. During the Trump tax cuts, they got it up to 11 million for each spouse if you have the right wills done right. Now they're talking about lowering it back to 5 million adjusted for inflation, and it may get as low as 3.5 million.
And I think they floated it out here just to see how everyone would react. And it'll be interesting to see what the narrative is. I believe the biggest crush is going to come from small business and that kind of job creation. I don't know why you would do this when you're trying to come out of a pandemic. Like, there's so many other things to do coming out of the pandemic, and I believe the things to do are inflation related. Trying to figure out how this is not the way to get wage growth. Like, this doesn't move the needle with wage growth.
Well, this will help. This will help control inflation by hurting the economy.
Well, that's the worst way to control inflation.
I agree.
No, I know. Which I know you're joking. Which goes back to Hunter. Like, when Hunter
guys aren't economists, Tim. They're politicians.
Some economists. Who's the pencil
most
neck?
Economists aren't any good either, by the way.
Who's the Eraserhead guy?
Yeah, who's the Eraserhead guy?
Oh no,
Austin Goolsbee.
Yeah, Austin Goolsbee. This plan reeks of Austin Goolsbee. I'm quite sure he's somewhere out there touting how this is great. This is not how you incentivize risk taking, and that's what this country is built on. Whether you agree, could there be more equality? Could there be more? This isn't an equality discussion. I don't see how taxing people. You're going to tax a group of people more, and in an effort to bring more equality. But I think it's going to absolutely have the wrong. You're going to find people finding new loopholes because the whole tax code.
That's exactly right.
Yeah, the whole tax code is one giant loophole. What you're going to do is create different loopholes for people to jump through, and you're not going to have the desired effect. And then, because the world is not one cartel. The most famous cartel, other than El Chapo, the most famous cartel is OPEC. OPEC is a cartel. OPEC can't get their shit together. There's always a country, hey, we're going to slow down production, right? We're only going to make 3 barrels of oil a day. And there goes Iran, just pumping the hell out of oil. Like, they don't trust each other. OPEC doesn't trust each other. They don't verify anything because they know they're all going to cheat. Do you think there isn't going to be a country like Ireland that comes out and offers better treatment to move your quote unquote headquarters over to Ireland? There's going to be tremendous disruption of capital towards the, if this is to be law, I believe that there's going to be tremendous capital disruption towards the end of the year. And all that disruption, right, wrong, or indifferent for the markets, is going to cause uncertainty. And that uncertainty is probably going to lead to a sell-off in the markets. Markets love gridlock. Markets kind of know where the path is going. The uncertainty will create a rise in volatility. The rise in volatility will trigger the algorithms, and the algorithms will be ultimately what triggers the sell-off, regardless of what your politicians or your Fed tells you. Because as we tie it back here, Danny, this is why I went to professional broadcasting school upstairs in Connecticut, because when you have someone telling you that inflation is transitory, when you have someone telling you that it's not real, like Jay Kapow has done, and then you go back to the beginning of the show, and we're talking about $17 hamburgers, and we're talking about the price of hogs, soybean, we're looking at the price of lumber. That is inflation, and that is hitting you right now. Oil, inflationary. Like,
Perfect time to raise taxes, right?
Well, that's the thing. Like, you've got that's exactly my point. Thank you. And I mean that sincerely. That's not me being facetious. Your people, this tax isn't just going to, isn't about, we got to make the rich pay more. Like, that seems to be the narrative. And I don't even know who the rich are anymore, because it's really freaking expensive in this country right now.
You don't have enough rich people to put.
That's a whole nother topic, and I'm trying to dance around it. The inflationary factors that I'm talking about affect everyone at every income level. And the people, unfortunately, at the lowest end of our economic spectrum in this country are the programs programs that assist them, the charitable programs that assist them, because the government isn't the best helper of people at the lower end of the economic spectrum. It's private charity. They're probably going to be able to do less. And if you look on my screen here, from 1954 to 67, the maximum capital gains tax was 25%. 69 to 76, it increased. Okay, the 78 congressional eliminated the minimum tax and excluded gains on 60%, thus reducing the rate to 28%. So when we had Jimmy Carter and stagflation, the maximum capital gains tax rate was 28%. And I know people, Danny, we had massive inflation at the end of the 70s and into the 80s. And that's partially what destroyed the Carter presidency, and then some other geopolitical things, and ushered in the era of Reagan. And then Paul Volcker came in. What were interest rates? What were mortgage rates, Danny, in 1980? 17, 20?
16, 17, depends on your credit, yeah. High double digit.
So let me just throw this out here. Do I think we're going back to that? No, I don't. I don't think we're going back to that. Am I about to tell you that it's a market and anything can happen? Yes, I am. And whatever the equivalent would be in 2022, 2025 of a 17 to 20% mortgage, think 8%. 30-year mortgages are what right now? 3.25? Something like that? 3 point anyone? Yeah?
Around 3, yeah.
Okay. Well, imagine if that tripled to 9 or 10. You don't think that's going to shut off? Like, housing punches above its weight. So what does that affect? All the service trades, right? All the people out there working construction right now. You know, the jobs that, you know, we need to have robotics and we need to have intelligent jobs, not these construction jobs. There's a massive group of people in this country right now working construction. God bless them, building things. And oh, by the way, they need trucks to get those things there. And God bless the truckers in this country, because without them, nothing would have freaking moved during the pandemic. God bless the truckers, but we need all these other high-tech jobs. Now, we people who could drive freaking trucks safely on the roads, and we got those. They're moving stuff. You want to see this economy come to a screeching halt. The ramifications of this tax bill will not be known for probably 2 to 3 years. When it's not too late, but you'll have to usher in another Paul Volcker to come in and squash a doubling or a tripling of interest rates. And then on top of it, that cherry on top, let wages not move. Because if you think about that whole period of end of Carter from Reagan till now, Danny, wages haven't adjusted for inflation. So pay more, $17 hamburgers, let your mortgage rate double, have less jobs potentially. And then, oh, by the way, let wages not continue to move higher. It's a real issue. And it's crazy that coming out of the pandemic that this is the discussion. Absolutely crazy that this is and I think that what it's going to do is worsen inequality because the people that drive the economy will stop spending probably.
Well, like Milton Friedman, his whole principles of trickle down economics, this is just putting a splinter in that whole theory.
Yeah, and that's a whole that's a whole different rabbit hole. But I think what'll end up happening is that Joe Manchin won't stand for this. I really believe, I'm not being facetious, Joe Manchin, I believe, is controlling the Senate, and he has the president's ear. And the tax rate will end up being whatever Joe Manchin says. I could be wrong. So anyway, with that, Dan, you got anything else?
I want to make a couple comments real quick.
Yeah, I was going to ask you. Go ahead.
You were talking about inflation being transitory. Inflation's been transitory since 1917 when the Fed was created.
Well, that's not me. That's Jay Powell.
No, I know. But I'm saying inflation has fluctuated, but it's continually gone up. So in 1970, 3 cents would buy what a dollar will buy today, and that's a 6-7-year-old figure. It's probably down to 2 cents now. So that's just constant inflation. But and then when you want to talk about interest rates, Tim, you talked about 9% interest rates. If interest rates just go to 6% or 5%, which is only 2 or 3% above from here, that's actually still not even right at the mean, the 30-year average. Bonds would lose 30. Bonds would get slaughtered. So all these retirees, it would just scare the bejeebers out of them. It would stop mortgage refinancing. It would stop housing. And that's why the Fed has painted themselves in this Hobson's choice. They got to let inflation run hot if it starts running hot, because they can't really raise rates too high. They've got a tough road to hoe. Anyway,
jeepers.
It's this issue, I believe, is probably, I mean, this has to be the most pressing economic issue of 2021. And here's the thing, if they make it retroactive, well, then everybody's in the same boat. Like, I don't know if that sell-off occurs. If they make it effective January 1, 2022, you'll see a rush to the exits.
Oh, yeah, everybody rushing to sell, yeah.
And I think it's going to trigger, the market is an auction, folks. Whether it's homes or you go to an auction for cars or in automobiles or the stock market. The stock market is an auction. And if people don't want to pay whatever the auctioneer is saying, like $3,500 for a share of Amazon or $2,200 for a share of Google, they're going to keep lowering the price till somebody raises their hands. And what's the value of equities in a high inflationary market? The 70s almost destroyed the stock market. The 70s almost destroyed William O'Neill. So ponder that this weekend. I felt depressing. Let's talk about some research. Hunter, what you got, man? Hey, hold on. Hey, Hunter, that felt depressing. Can you bring it back for us? No pressure.
Come on, Hunter, save the show.
One second,
Well-
further
If you
depression.
can't-
Tell me who the,
You
we're not
can't
going to
get mommy on the phone.
before we talk, Hunter, the Eagles are going to draft before we talk again on this podcast.
Mm-hmm.
Who are the Eagles going to take?
Jalen Waddle or J.C. Horn / Patrick Surtain. They're either going corner or receiver.
Do these people play for Alabama?
2 of them play for Alabama. 1 plays for South Carolina. He's Joe Horn's son.
This draft, we should just take the whole Alabama team. Like, don't even consider other schools. We're just drafting from Alabama.
It wouldn't be a bad. There's like 5 or 6 that'll go in the first round, I believe. So
That's a factory, man. That is a business. That school is. I
Hey,
mean,
we can't mention Toomer's Corner without mentioning the Alabama fan that tried to poison the trees there, can we?
Harvey Updike, a true hero. MeMommie will crucify me for what I just said. She hates that man.
Didn't he just die?
I think he died in prison, or maybe he got
went
out
to
of prison.
prison.
He did pass away though.
Think about
Wait,
the ridiculous.
MeMommie's an Auburn fan?
Yeah, they live on 525 Auburn Drive, 1 mile from the
Jeez.
stadium.
How'd
Both
you end up an Alabama fan?
My dad. We got a split family, so it makes for interesting Iron Bowls every year.
I'll bet.
You guys remember kick 6?
That's
Chris
worse than
Davis.
having liberals and
I was just about to
conservatives
ask you that. That was the best Iron Bowl ever, where he ran it all the way back, and that team, that Auburn team, was not a good team that year.
Yes. So we were at MeMommie's house, my dad and I, watching the game in a separate room. And as that happened, my grandmother was going crazy. And my dad's face was just pure, just solemn depression, rage. And I just knew he wanted to explode. That was one of the most shocking I've ever watched.
You gotta go to your own room, separate corners.
Yes, we do.
That's
Not all
fantastic.
the time. I watch games very quietly. I don't really react, but my dad and my grandmother, not so much.
The Alabama football, I mean, Nick Saban must be the most impressive, like the most successful recruiter ever in the history of any recruiting. Like, I don't care if it's for the military, whatever recruiting, he's the most successful because he's got NFL caliber players at every position, and he's got them 3 deep, and he's going to kids' homes, landing in his helicopter, and he's saying, hey, look, you're not going to start till your senior year, but when you start, there's a good chance you'll go pro. And they're willing to sit there behind it. It's amazing.
He had a leaked recruiting pitch that somebody leaked on Twitter or something, and it was basically like, you see these rings, you want to come play with a bunch of other 5 stars and compete at the highest level and get drafted and make money, and just come here where you win championships and you get drafted. It's a hard argument to go against. I mean, that's what
but that counterintuitive, that it's not counterintuitive, but that, like, hey, we're successful, do you want to come be a part of success? That is exactly the tack the Marine Corps takes. Like, we're looking for a few good men. Like, you don't hear that too often anymore, but that whole, do you want to go join the Navy? Go ahead, anybody can do it, but if you want to come here, you're going to compete for a spot on the team, so to speak. And that psychological play works. It's very powerful. It's extremely powerful. I'm going to get a bunch of Navy hate mail. My email is dan@revereasset.com. And you probably can use, if that doesn't work, my other email is alex@revereasset.com. Go Navy, beat Army, for anybody out there, just to get on your good side. All right, Hunter, give me some stocks, brother.
Yeah. Actually 2 stocks, same space. CrowdStrike and Okta have started to show some relative strength in the last week or so, maybe a little bit more than that. Both have seen, and I know you can't see RS lines here on Thinkorswim, but both have seen a nice little change in the trend of their RS line, both moving upwards over the last about 2.5, 3 weeks since I guess that's about March 23rd-ish, March 25th, kind of the bottom for Okta and for Crowd. But just an area where there's some strength. Both are back above their 50, back above their 21, after being below it for a decent little bit there from February into March. The other group that's gotten beat up really bad, TAN, the solar ETF.
Yeah, let's take a gander at that.
Had their first close above the 21 yesterday since, I want to say, 212, 216, I think is actually the last one.
I got one
So,
of maybe that closed below it. Yeah, I know what you're saying there. Absolutely.
yep. And so a couple of names that actually look better than tan. Pull up FSLR.
For
Looking,
solar.
a couple of these names are looking for their first close above the 50 in quite some times, or either got it yesterday or looking at getting it today. FSLR, ENPH in phase, which was added to the S&P 500 in March, I believe. Also trying to get back above their 50-day moving average. And then DQ had a monster day yesterday. I believe they were up about 15% or so, 14, and then up another 3 today. But there's been some, if you look at the volume bars in the last 5 or 6 days on those 3 names that I mentioned, they've had some decent volume come in, more specifically FSLR and DQ. But some of their highest volume on up days that they've seen since the top really back in early.
All right, did you say
January,
EQ
February.
or DQ as in David?
DQ.
Oh,
Day
apologize. I was wondering what you're talking about, but I
My
was going
bad.
to go with it. Nope, thank you for calling that out, Alex.
Good catch, Alex. So anyways, I know a lot of these, they have overhead supply, but there's been some volume coming in. They're getting back above their moving averages. So I'm just watching it to see if the move can continue. And then lastly, perhaps this will add to the discussion, but can you do an overlay of charts, Tim?
I can. It's a bit hard. I don't want to waste their time.
No
I'll get it
worries.
ready for you next time.
Pull up LPX, Louisiana Pacific, and the reason I ask is it should look relatively correspondent with LBS, the lumber. So this is probably, I would say, the strongest name in the
There we go.
in
Oh
the
yeah, they
lumber
look the
area.
very same. Yep.
So there's a couple others. I think like Boise Cascade is BCC is their ticker, but LPX has the strongest relative strength. And they pretty much just consolidated around the 8-day over the last couple of days, and then reclaimed it today with a little bit of conviction, up 5.5% today. So lumber stocks are just as strong as lumber prices, obviously, but I thought it would be interesting to look at LPX in comparison to LBS.
And it's interesting because here, let me just do that. I apologize for interrupting you. Even a Home Depot at all-time highs. Just if you sell goods that are inflationary or cyclical like that, you're.
Tim, do you know when was the freeze in Dallas? How long ago was that?
March. It was around Valentine's, like Feb 15th,
Okay.
excuse me, around there.
Okay. I was curious because Home Depot kind of started this run around March 4th, March 5th.
Yeah,
where they bounced off that 246 level. I was curious how it corresponded to that time, because I know there was a lot of repairs.
I didn't understand this right in here with Home Depot because, well, that's earnings, I guess, related, but you couldn't get parts, like either that and Lowe's too. You couldn't. I mean, there's still a backlog of stuff. Ton of people are. That happened to the whole space. Ton of people are still waiting for homes to be redone down here. It's it's crazy.
I have a friend that they handle a handful of real estate properties, and he told me, he's like, dude, because it got Alabama too, not as bad as Texas, obviously, but they were having to repair a lot of pipes and stuff like that. And he's like, you can't even get anything in Lowe's or Home Depot. It's absolutely slammed. You can't get anything that you need.
Pool parts, pool supplies, hell, even chlorine right now. There's a run on chlorine for some reason for pools. It's absolutely insane. Was that all you got, Hunter?
Yeah, that's it.
Alex, what you got, man?
Parlaying off that, the whole home building, like furniture, your landscaping, what have you, pools, SiteOne, so SITE, setting up, pretty good RR here, risk to reward. You can go back to RH, actually. That's been my best name this year. I got in that gap up around $515. It was back in, I think it was March I got in, and it's just been a screamer, like leading. I wish I had bought more of it. I guess that's how it works usually, right?
I like RS
more.
I like RS more than I like Williams Sonoma in terms of stock wise. RH has. Are you familiar with their business model? They sell.
I know that they changed to a membership based model now. So basically it's kind of like the sub model that Netflix had basically designed for the entire country, and you pay, but you get. Have you ever been to the store? They have one in here in
Amazing.
Scottsdale. It's totally different. It's a different demographic to the people that shop there.
Mhm.
It's the whole home building thing. So we're talking about lumber, landscaping, equipment. We're talking about DHI, like an actual home builder. Anything that has tentacles to that home, right now, those stocks are working.
Yep.
So I'm trying to really follow that theme for now, until we'll see what taxes do at the end of the year. But yeah, so those are the names. SiteOne Landscape, RH looks good. The other one that's not in this sector that today I actually bought was SE, C Limited. That was a previous monster stock last year, and it's consolidated with a. Don, would you call that a cup?
It is a cup if you ignore the spikes on the left side, which normally aren't there. But yeah,
Okay.
you would prefer but that has to do with the volatility around the growth stock sell-off. But if it puts in a nice handle, and then it did have, I can't tell what the volume was for the last couple of days on that from the chart, but it's reclaimed its relative strength. It's back above its moving averages. This is its third day up, and it's at a little bit of resistance here. But if it can break through it, it's got the potential to regain its leadership.
And I think this was a big Kathy Wood stock, if I'm not mistaken. She was big, very bullish on this name too.
Interesting.
So yeah, those are the three.
Okay. Awesome. Don, you got the 21 over 21 tonight. This is Friday the 23rd. You want to do any preview or any moves?
Yeah, a handful of changes, but I want to highlight. Hunter talked about a couple of sectors. Another sector that's starting to show some strength. Bring up the two ETFs, Cyber, CIBR. CI.
Thank you. I thought you said CI.
CYBR is a stock, but
Yeah.
that you're gonna see a similar pattern.
Oh, there you go.
This one a little bit better. So putting in a nice cup and handle there, and also SKYY, which we bought in house yesterday. And the top holdings in these have some very nice patterns going on too.
Awesome.
Good.
Danny, let's do this. Tell us who we are. Do your normal close, and I got one last thing for stock nerds and market lovers.
All right. By the way, Don, when are you going to do your lunch and learn? What day is that?
Tentatively scheduled for May 12th.
May 12th. All right. So, folks, if you like what you heard, please tell a friend, tell a neighbor. Just send them to revereasset.com, and they can go to the subscribe button. They can sign up for this podcast as well as our daily market insight, short market video every day the market's open. It'll come into your inbox after the close or early evening. And we won't spam you or hassle you in any way. It's up to the subscriber to reach out to us if they want help, or if you just want a complimentary portfolio review or have any questions, you can email any of us at dan@revereasset.com, don@revereasset.com, tim@revereasset, Hunter@revereasset, or Alex@revereasset. You can also call us old school at 855-REAL-WEALTH.
All right. One last thing here. So see if I can pull it. Somehow the screen cameras are going away. So I had like two or three. And I always think there's more when three people ask the same question. So let's use Q. I did this the other day, but I had a couple people email me about, it wasn't timing the market, but it was they were getting stuffed on a couple of positions that they had, and you can see the market here, like the Qs are just kind of consolidating up here near highs. I mean, this is a super bullish chart, but when do you want to be building your biggest positions? This is where the question was. They're trying to establish super big positions. I don't know about super big, but full positions here. We'll just use FP as that up here, and that might be right. And whatever stocks you're trying to endeavor in might push through and move higher. But the longer this consolidates, the more bullish it is as the moving averages try to catch up. But where you can really make your biggest gains, stock nerds, and it is typically this right in here. And so this is you heard Hunter or Alex mention the 21. Maybe it was you, Alex, and I apologize. Just a little.
No, it was Hunter.
Okay, so here is one close above the 21 on the Qs, and right here is two closes above the 21. And just look at these dates. 4-1, so 3/31/4/1, and then it's 4/5 because he took a break for Easter. This is a really big move. Like, let's just say you recognize it's going to close above the 21. For the index, that's over 4.5%, almost 4.75%. But like, if you take a stock, and you could pick any stock, like look at Amazon. So, this Amazon is just following the NASDAQ. And so here's Amazon on 3/31, right at the 21. You get it, we'll call that second close above the 21. And then you get this move from what, 31.50, just call it, to 33.69. You can make really good money trading this stuff. Like look at Google. Same thing. So here is 3/31/4/1, or excuse me, there's 4/1. I mean, Google makes this huge move from 2,100 all the way up to 2,300. That was just today at 2,300. And you can go through a whole bunch of stocks doing that. But is the time now to be loading the boat? That's hard to say. I mean, I don't know. But I know the questions all had the same theme, that they were missing moves. And where do you, for lack of a better phrase, where's your best bid for victory? Where do you load the boat in position size? Let me add this: load the boat relative to the position size you're comfortable with. Is that the best way to say that, Danny?
Pretty good, yeah.
Yeah, and it's being able to
Where's
identify.
the best low risk entry, and that would be close above 21, but also those moving averages, the shorter term are overtaking the longer term moving averages.
That's a great way to say it. And then if you really want to take it one step further, if you can screen for them, and it's not easy to do. This is Google, and of course I'm looking at this in hindsight with you, but when look at the Q. So here's Google, and I want you to pick up on this consolidation. This was a little befuddling to someone that direct messaged me on Twitter. So here's Google not falling apart, and then once the market turns, look at what happens to Google. And so, but if you go to the Qs during that whole time frame, and Don's alluded to it, the whole growth stock scare back in February, as I'm looking for. Here it is. Jeez, come on, charts. I apologize at home that the charts are not working properly. But look at this whole growth stock scare, right? This is the same time frame we just looked at. And then look at Google. So when you see stocks doing their own thing, and Don's really good at finding these, if you see stocks just doing their own thing when the market's falling apart, keep an eye on those, because when the overall index finally turns, that's typically your bid for victory right there. And you find about 4 or 5 of those throughout the year. It's going to make your whole year. So Danny, any saved rounds, alibis?
No, I will say this, folks. Tim was talking about the NASDAQ consolidation. Just remember, the big tech stock earnings are coming out next week, and that's going to be important. So you may want to have a plan ready in advance and be ready, because if they start to beat and they have good numbers, you could be poised for a rally. Of course, the opposite is true, as they disappoint. I personally think that whether they sandbag and beat earnings or whether they just beat earnings legitimately, either way, my personal opinion, which doesn't matter, is that they're going to beat earnings. So we could be setting up for a nice rally.
Take us home.
Folks, we'll talk to you next week on Your Money.